broad stripes and bright stars through the perilous fight, and the ramparts we watched were so gallantly streamed, and the rockets' red glare, the bombs bursting in air, gave proof through the night that our flag was still there. Oh, say does that star-spangled banner yet wave o'er the land of the free and the home of the brave.
Good morning, good Friday morning. We're live on Rumble, X, and YouTube every weekday morning at 8 a.m. Eastern Time. Today is Commodity Friday, and it's day 3 of the government shutdown. So we've seen this movie before. We just haven't seen this since Trump 1.0. Okay, so the markets, the stock markets actually love this, all right? All-time highs in the S&P 500. Okay, we're on a 5-day winning run. We've been talking about this in the stock market. You know, we had the energy build. Okay, we're above the 65.74 in the S&P. We're above the 24.126 in the NASDAQ. And energy, again, decent energy build in the S&P. And what we're watching, okay, again, you know, we got these four U.S. market indexes that we're watching. We're watching the Dow 30. That tells us a lot about capital flows, right? Big money coming in from outside the country. If we see the Dow outperforming, then that's usually what it tells us. Safety play, okay? If we see the S&P 500, it gives us an idea of a big, broad market rally, 500 stocks. We see the NASDAQ 100, right? That's technology-based. That's what's been driving this market for the last few years. And then we put this one in here. We talked about this the last few weeks, the Russell 2000, the small cap, medium cap. So basically small and middle-sized businesses, you know, somewhere under the 500 employee. It can go over that, but generally speaking, somewhere in that smaller range, but still a decent-sized company. And this is what we're watching for, to see if this Russell 2000 can start to break out and actually maybe start to outperform. That would give us a good indication that all this economic policy is starting to trickle over and actually come into the growth side of the U.S. And if this country is going to grow and we're really going to sustain this 3 to 3.84% GDP that the administration's put out there and actually has been achieving so far, if that's going to be sustained, and it's probably going to have to come from small to medium-sized business and not so much large corporations. Now, you can make an argument the other direction, right? That I'm speaking historically. You can make the differentiation that the large companies are actually going to outperform. Why? Because they have the AI, okay? They have the productivity. But that doesn't mean new jobs, right? That's not good for the people, okay? That's just good for corporate profits and, you know, displacing people with technology, right? The AI, the robotics, all these different things, okay, that are coming into the mix that I don't think are gonna, I think we're gonna see them really come about in the next 1 to 5 years, okay, in big ways. So that's kind of the backdrop on this stock market running away. Now, yesterday, J Steele 43, okay, in the chat, he mentioned the global PE ratios, and I want to show that real quickly because this is good, and this is right where I want to take things, especially for this morning session that I want to do before the show. So I'm going to try to, I keep saying this, but I really, and it's once I do it, it'll be fine because then you have all the processes in place. But it's hard to make that jump to doing these short videos, and that's why potentially shortening this show up a little bit, you know, to maybe 45, 50 minutes. Maybe an hour. We'll see. There's some things in the mix. We'll see what happens. But then the key is trying to do these 10-minute videos where you really break things down. In the morning session would be global markets, right? And I've been talking about this for a long time, and sooner or later you just do it and you get it done. And then once you do it, then it's just a process. And it's good. The thing is, it's good. I think it'll be good for us because we get a really good global world perspective, and that's the concept of the show, World HD. So we can put the harmonics on these global markets, and I want to do it for us, but it's also beneficial for me. And so there's a lot of push there, right? There's a lot of carrot there and a lot of stick. Maybe the stick hasn't been big enough yet to actually get me to do it, but it's getting there, right? So I want to start doing that. And this fits right in with what Jay Steele was saying yesterday. So let me show you this. I'm going to flip over. Wrong one. Let's go to this one. Okay, let's take a look at this. This is what he was talking about yesterday on this global PE. Okay. And so here we have PE ratios, price to earnings ratios by country. Okay. And last update was what, 2 days ago, yesterday. And so what we're looking at here is the dark blue. The darker the blue, the higher the PE ratio. Okay, so you can see New Zealand down in the far lower right of this still. That's the worst, the highest PE ratio. And then you can see some of the dark blues. And this kind of gives you an idea too. If you just look at this, this is really where the global economic activity occurs. You've got China, you can see India there in dark blue. I wonder if I can actually, I don't think this shows up. I don't think my pointer shows up on this. Anyway, I don't know if I can point any. Anyway, directly across, you can see Australia, and then you can see the whole, the Indonesia, Malaysia, Philippines, Vietnam, that whole Asian region in there. And then you get up to India and China. India's in the dark blue there. Kind of looks like a, I don't know, diamond, I guess, to some extent. And then we go over to Europe. Obviously, we see a lot of economic activity in the upper end of Europe, and then South Africa, down at the bottom of Africa. Okay, we see that, and then we work our way across. South America has decent amount of economic activity too. We're going to talk a little bit about Venezuela today. No, I'm sorry, not Venezuela. Argentina. Okay, follow up on Argentina and how this interacts with these negotiations that President Trump is going to start having. It looks like with China. Okay, and a couple weeks ago, Scott Bessent was trying to orchestrate at least a phone call, right? Starting to open up the negotiation process with China. And they started small, right? It was about little things, TikTok, which actually is a big thing, but TikTok's actually a very huge thing in terms of this technocracy, okay? The TikTok being handed over from ByteDance. ByteDance only has 20%. The 80% of it has now gone to Silver Lake, Andreessen Horowitz, and and then Oracle. Okay, they're going to have basically house it, the data and the algorithm, probably control the algorithm, and then of course we saw the Murdochs quietly involved in this. We don't know what their role is yet. So again, these are the kind of things that happen, and then we have to just pay attention, all right, and watch now. That being said, that was what opened up the negotiations with China. Then it starts to escalate into other things, right? We've got the chips, the NVIDIA chips. Are we going to offer them? Are we not? China wants them. China doesn't want them. Back and forth, back and forth. China doesn't like it when there's lots and lots of excuses. We've covered that, pretty regularly. I think we've covered that fairly well. We're going to continue to cover that, especially as these trade negotiations roll out. And now we're starting to see this hot button pop up again, soybeans, okay? Soybeans for the farmer. Why does this matter? Well, it matters a lot because, again, politics, right? Before you know it, we're going to be in the window of the midterm elections, and you've got to play to the base, okay? And you really probably do want to help the farmer out. If you really do care about this country, people who really know agriculture realize how important agriculture is to the world economy. It gets neglected all the time, and that's why I love doing Commodity Friday. That's why I'm excited to do the show, because we get to look at some things that may not seem all that exciting, okay, like soybeans and wheat and corn and sugar and coffee and cocoa and all these different things, right? But they are important, okay? They're important things because, again, humans consume this stuff. We know that we know that there's been entities out there, big entities, that have been trying to take away our food sources, and we can see this showing up in protein, right? Feeder cattle, live cattle, different things like that are going to all-time highs, even though the agricultural space is depressed, right? Soybeans are near lows, corn's near lows, wheat's near lows. That may change, okay? That may change, and that's why part of this negotiation comes in with President Trump and President Xi as to what's going to happen here with the soybeans, and are we going to start to establish trade again? Because I think the deal was, I think it was for sure $23 billion deal in soybeans with China pre-COVID. Okay, that whole debacle, and then it didn't get enforced. All right, okay, and now we're talking $10 to $14 billion, and we're going to break that down today because I think this is going to this is going to come in the mix. All right, and I wouldn't be surprised if this starts to hit mainstream media at some point. And the soybeans will hit topic. It's just a question of how big. How big is this stuff going to get, and what are the impacts of all this, and what are the global impacts too? Okay, so this is the PE ratios. This goes back, but this is a good look at the economic centers around the world, right? This is where most economic activity occurs. And you can see Russia, that huge, massive landmass up there, but not much goes on up in there. And you know that just sitting up in that whole big space, the biggest outline up there, over to the right, up north, on the north side of the map, that there's massive amounts of rare earth metals and minerals and resources in that whole region. Now, a lot of it's really cold and it's tundra, in pretty cold space. So, okay, some of it not, but there's a lot up in there. Okay, and that's a lot of what this. Anyway, we talk about this regularly. That's a lot about what this potential war with Russia and Europe and using Ukraine as kind of a proxy, right? And that whole thing, a big proxy nonetheless. Okay, but here's what I want to talk about. Jay Steele brought this up with the PE ratios. Now, the blue is indicating stock markets, right? Price to earnings ratios in stock markets. And you can see the darker the blue, the higher the PE ratios. Now, that doesn't always mean bad because, again, PE ratios are this mystical thing that you can say, well, 20 is a good PE or 11 is really deep. That's a great value. Anything in the 11, but China's 11, right? Or 11 or 12 on the PE scale. And so it doesn't always mean everything. It gives you an indication of something that's undervalued. Okay. So the price, again, I like that. We have a price in there and then we have the earnings. Okay. And so those are two good things. A lot of things sometimes better, though, is like free cash flow or if you're going to use fundamentals, there's sometimes better. You at least have to double check it, right? The earnings can get manipulated and distorted because it's not really apples to apples and oranges to oranges, right? There's definitely pears and, kumquats and grapes and everything else in the mix, okay? You got all these different things and watermelons in the mix, right? You got little and small, the grapes, the watermelons in the mix of this whole thing. So it's not apples to apples, right, comparison. So that's what we want to be careful with the price to earnings. However, you can see that the darker the blue, the higher the PE ratio. Okay, but we're going to bring that into the mix. I appreciate Jay Steele for pointing out this website. Great website and a good reference, right? I think you can just look up global PEs and that should show up. All right. Okay, so let's come back in here. And what I want to go through is this, so with this shutdown, and we'll try to get through this quickly because, again, this is, it just going to, right? Is it 8 days, is it 15 days, is it 30 days? On the I don't know what's going on in the mainstream. I did turn on Fox last night. As painful as it was to just turn that on, and Ted Cruz was on with Larry Kudlow. Larry Kudlow, I used to follow him a long time ago, and I just can't almost even stand them anymore because it's just such. There's an agenda, right? And there's really there's no discovery going on there. And it's just so frustrating for me to watch. And I used to fall for that hook, line, and sinker. I thought that was the source, Fox Business and CNBC and Bloomberg. And mostly I watched CNBC, and that's where Larry Kudlow used to be, was on CNBC, right? He had a show with Jim Cramer, these two clowns. And, and I thought that was a source, right? I really thought that, 10, 15, not 10, maybe 15, not so much 10. 10 years ago, I was pretty much onto it, but 15 years ago, 20 years ago, 25 years ago, and things have changed, right? The internet's come a long way. There's a lot more resources out there. A lot of resources have been developed and built since then. So we don't have to have that anymore. We don't have to listen to that stuff. And that's the beauty of this, live streaming. You can find someone who hopefully adds value instead of that stuff. And it really is painful to watch. So the reason I bring all that up is this shutdown. Okay, what does this shutdown really mean? Is it really going to do anything different? What's going to really make the difference? Is it going to come down to polling? Because they're constantly polling, right? They have their own polling sources, and the left is polling and the right is polling, and it's like, okay, who's winning, right? And they read these polls and they say, okay, well, we're going to have to, let's keep pushing until our polls start to slip, and then we'll come back in. So And I'm just getting sick and tired of the right and the left and this whole, battle back and forth that appears like something's happening when nothing really ever happens. Because what's ultimately probably going to happen here, there's a high probability that this is the same old thing. We're going to go a certain period of time, and then all of a sudden there's going to be a breakthrough, and then they're going to hype that for 2 or 3 days, and they're going to let everybody do their parade, Thune and Johnson and Schumer and maybe some of the downline, they'd love to get AOC in there to displace Schumer potentially, right? I mean, you can see everyone jockeying for position. And why this is the case, I don't know. But what's really going to probably change this is the polling. And when people start to miss their first paycheck, okay, I think there's 750,000 government employees on this that fall underneath this shutdown umbrella. So maybe probably more than that. There's a lot, right? A lot of people. And so when they first start missing their payroll, right? The first payroll check. Now all of a sudden the pressure is going to come on. Okay, so where's that? About 2 to 3 weeks out. So that's why these things are probably going to last about 14 to 21 days, and then the pressure builds, and then the polls start to slip, and then they have to finally get something done. So the question is, did they solve any problems? Is anything going to get solved during this shutdown? Or is it just going to be the same old, same old? Odds are it's going to be the same old, same old. Okay, so we have Caroline Levitt out yesterday saying that these layoffs would be happening, and the question is how many, and they almost you're going to get plenty of that. I just want to go into this. Okay, so what's impacted? Let's just look at this by what's impacted on the shutdown. Let's pull this up. We've looked at this a little bit. Okay, these are the data points for us that matter, from a financial perspective. So again, October 2nd, we missed the initial jobless claims, non-farm payroll. That would be today. Now, they probably have this data calculated, okay? And so you're going to see, what's her name? Pocahontas, right? Pocahontas was out talking about this, and she wants the data, right? It's just fight for relevance, It's just, it's so funny to watch. Anyway, they probably have the data, collated for, they could release this data point today. They're probably not going to, because we didn't see some data come through yesterday. So there's no reason to believe that they're going to release this, even though they probably have it. Okay. And then what comes next, right? October 15th, CPI, October 16th, retail sales, October 16th, producer price index, consumer price index, retail sales. These are things that the Federal Reserve can supposedly use, right, to help them make determination whether they're going to cut rates. Okay. The end of, again in October and then in December. Okay, those are the two points in time where they can do this, and they can even do an intermittent cut, right? And they can have a special meeting, but a lot of times that raises red flags. Okay, so we're not expecting that. All right, so here's what. Well, let's just get to Pocahontas here. Okay, here's what she said. She calls on Trump to release the payrolls. Let's be clear. Let's be clear, the jobs data scheduled to come out this Friday has undoubtedly been collected, and the president must release it. All right. Okay. And then as if it really matters that much, it really is comical. Okay. So here's what's being impacted by the government shutdown. The federal courts, they remain open. The TSA, passports, air traffic, it remains open, but probably sluggish. All right. Economic data mostly closed. That's what we're talking about. Potentially is some economic data. Would they release the jobs data today at 8:30? It would be a surprise, right? They haven't indicated so. The indications are that they aren't going to release it. So Pocahontas isn't going to get what she wants, but it's going to give her talking points throughout the day. And I'm sure she'll be out there talking, okay, and angry. She gets all feisty. And then we have small business loans, mostly closed. National park monuments, mostly closed. Although there's been talk of trying to keep those open. Okay. And then I think that covers it from that front. All right. So that's that. And I don't think there's anything much more to talk about this on the shutdown, unless someone has questions in there. So we've got Geo Rich, good morning. Frank, good morning. Rachel, morning. I like that one. Okay, hit the button, people. Yep. Okay, thanks, Frank. Thanks for the reminder on that. Trumpet, good morning, Trumpet. We missed you one day this week. I think you were only out one day. I thought maybe it was going to be two, but I think you just missed one. So thanks for tuning in all the time. We were forced awake. In 2007, I fired the cable company. I'm certain it's why I question everything now. Yep. Yeah, we've all had those moments like that where you've kind of had enough, and you're. Yeah, you've kind of had enough of the way the old way things are done, and we're just tired of the we're tired of the lies, and the gamesmanship. I mean, we're in too much trouble to be playing these games, from a financial standpoint. Okay, some congressmen are opting to not get paid. Okay, that's good. I mean, that's always a good sign, right? That's a goodwill thing. I mean, does it really matter to them? No. They're going to, at some point, the government will reopen and they will get back paid. They'll get caught up. So, again, it's not that big of a deal to them. They can survive 2 or 3 weeks or 2 months or 3 months. But it is a goodwill gesture. So, well taken. Okay, TZ Burton, good morning. Gordon Q, good morning. All right. So, good morning out there. And, all right, so let's get rolling here. I want to get through some of this economic data. Let's go here and all right. So again, the big thing this week was going to be jobs, right? That's what we talked about coming into this week. No surprise the shutdown, but this is a big impact, right? The jobs number is what this week was about on an economic front. Okay. Let's go ahead and look at yesterday's data. So again, not much there. French 10-year auction went fine. Challenger job cuts. Negative, but that's actually positive. I don't know why that. Anyway, so this isn't normally a big data point, this Challenger job cuts, but they've sort of, because we're not getting the other data, they amplified it. And I think I may have put that in there wrong because it was expected at minus. Well, let's take a look at it. Let's just solve this question right here. There's no reason to leave this murky. Let's go take a look. Let's look at this guy and let's just fix it. Okay, so here's what we've got. Challenger job cuts. Okay, let's just take a look at the chart. That'll help us sort this out quickly. All right, so again, not much, right? We see back here, COVID, the 2020, this big spike in job cuts. And then on a percentage, I think this is percentage or this is actual raw data. Let's take a look at this. So they put it in percentage. So this is a nice site. If you guys, if you ever want to get into this stuff at all, and my job is basically to funnel it down for you so you don't have to do this. But it is good to go back and just occasionally look at these things just to know what all this stuff. This is just such a great site. It gives you the quick down and dirty. Okay, so it says released monthly, usually on the first Thursday after the month ends. It's extremely early data, but historically has limited short-term correlation with overall labor conditions. So they don't really give us how it's calculated in this particular one, but it looks like it's all on a percentage basis. And let's look back, so it's pretty volatile, right? Back in May, the actual number was 62.7, 47 minus 1.6, positive 139%. And then this one was, and then we saw 13.3%. And then this last one was actually, what did it come in at? It came in at minus 25.8. No, it was, actually it came in at minus 25.8. But when you look at this, it's just not that big of a deal. Okay. It is a negative number. And let's look back through 2024. Since the beginning of 2024, we've had what? 1, 2, 3, 4, 5, 6 negative reads on this. So this is one of 6. And it's probably the 4th worst reading. I'd say there's 2 that are less than this, and there's 3 that are worse than this, or the same. Maybe 2 that are worse and 3 that are the same or better, a little bit less bad. So again, not a big data point, but people, again, this is what it turns into when we don't get the typical data, coming out. We make a bigger deal out of a number like this than what it really is. Okay. And, but everybody's trying to get an edge. That's the key. And I just don't think this is the place to look. But nonetheless, we're relegated to looking at some of these data points. And overall, the big thing here is to take away the trend, right? The trend. What is the trend? And we know the trend is that growth is better than expected. The administration said we're going to get you 3+% growth, and they did it. Okay. Can they sustain it? Inflation. Okay. We've looked at this. I don't know if I have that. I do have that inflation data point. Let me just pull this up because I want to show you this. I know most of you have seen this, but let's look at it again. This is the inflation over the past, since 2009. And, the green line is pretty steady, 1.8% annualized rate, right? This allows the game to go on. Okay. When they do that and they give you 1.8% inflation, it allows the debt bubble to expand, right? And they can sort of just inflate it away. All right, 1.8%, they can sort of inflate some of that debt away, and it keeps us on the wheel, right? It's our costs keep going up, and we keep struggling. We the people. while, the people who hold the assets, the people who hold the big chunk of the assets, right? It's very skewed. At some point, I need to put together a chart on this where you can see, like, there's very few people that hold massive amounts of assets, right? The Larry Ellisons or the Elon Musks who have, $400 billion of net worth, they pull up so much of the average and the average of the people who are earning $30,000 or $40,000 a year, right? So it just really skews so much of that. So again, very few, and they hold the big chunk of the assets. Okay, it's a small percent, maybe 5%, 10%, right? Hold the vast majority of the assets. So when the markets go up and we get inflation and the stock market goes up, we get asset inflation. Remember, we talk about these different types of inflation: asset inflation, demand inflation, currency inflation, these different styles of inflation. But in this case, we're talking about asset inflation. So when things go up in value, when prices go up, well, we're actually talking about all inflation here to some extent. But when assets go up, they outperform the rate of inflation. So they actually get wealthier relative to the inflation rate, but we get poorer, okay, because it just continues to eat away and eat away and eat away at our revenues. And this is why they say part of the reason why they say the dollar devalues and so forth, okay, over time. But then we had this spot here where, in 2020, when President Trump left office after the first Trump 1.0, you can see that red spot where it just really spikes. Okay, the inflation goes up, then it tapers off in the orange space, right? It goes from an 8.6% annualized rate to a 3% annualized rate. And then we see now we're trickling down to 1% annualized rate. And I need to update this because this is only through March to June of 2025. So again, it's starting to get to be 3 to 5 months old. But again, we know that the inflation is still sitting high, right? That's the Fed's job, is to try to bring down the inflation. They haven't been successful at it. The question is, are the tariffs going to trickle over and we're going to see an increase in inflation? These are the trends, right? The growth, the inflation, and then the jobs. Okay, those are the big three things we're watching, and we're watching for these trends. So that's why we watch this data, really, is just to take away these big picture trends. And so what do? We take a 30,000-foot view, we try to look at it from a distance, and then we dig in and see with a microscope. Same thing we do with the charts. At least the way I approach it, right, is take a big picture view, try to get a feel, and then see if something's changing, right? See if a trend or something is changing. Okay, so I think we're good on that data. And then, all right, so let's go back in here and we'll, yeah, okay, I think we're good. So that's kind of the thing, right? Taking this data, not taking it too seriously, but not ignoring it either. All right, okay. So what else did we get yesterday? We had that's Challenger job cuts year over year, percentage wise. Okay, then we had this natural gas storage, a little bit of a drawdown. Okay, so again, that's positive for the natural gas prices. Not a surprise. Over the next few weeks, the temperatures are going to start to drop as we get into mid-October, early November across the Midwest, and we start to fall into this true fall time frame. And guess what? For the first time in a long time, the heaters start to kick on. So natural gas starts to go, electricity starts to turn up, right? Fan motors are running, natural gas is getting burned. Whether people are on electricity or natural gas or however they're getting their energy, their heating, it's going to start kicking up. Water heaters will start kicking on, all that kind of, well, they're always for, but anyway, you get the point, right? We're going to start to go into that cooler weather and that will start to kick up. We'll start to see draws in natural gas. This is a normal cyclical process. They build up the reserves and so forth. Okay. So that we're going to watch. We'll see that start to come around here soon. And then we had this Logan Goolsby, talked about him. Keep an eye on Goolsby. Kind of plant that in your head. Probably going to see him in a pretty big position at some point over the next 5 to 10 years. And then this Bank of Japan Governor Ueda. We're going to talk about this, the LDP. I've been wanting to talk about this, but now it's heated. We're going to get an election today, and I think rolls into tomorrow in Japan. Japan's very weak, okay? We're going to talk about that. All right. Come back to that. Okay, Friday. Economic data today. Again, I dropped the jobs data because I don't think we're getting it. So let's just take the opportunity here to look at a few things in Europe. All right. This industrial production, this Purchasing Managers Index. Okay, first thing is industrial production. All right, that's the oddball on here. The French industrial production expected at 0.3, came in at minus 0.7, weakness. Now, France hasn't been one of the weak spots, but there's signs that France is starting to really crack as well. Okay, we talked about the UK, we talk about the European zone overall. Talk about we haven't done much with Italy, not much with Spain, but Germany, weakness, right? We've talked about that extensively over the last year. Again, what does that boil down to? Relationships with China. They used to sell combustion engines to China. China now makes so many EVs that they don't need The need for those combustion engines is down. So many things are trickling back to Germany that it's just putting a hit on them, okay? And their economy's having to shift, okay? And so anyway, so then we go into the PMIs, right? Purchasing Managers Indexes. And we can go through this, Spain, okay, slightly positive, okay, or decently positive. Italy, slightly positive or decently positive. And then we get French PMI negative, German PMI negative. The EU, okay, overall gives a number and it's negative, slightly negative. And then you get the final services PMI out of Great Britain, okay, and it's also negative. So collectively, pretty negative. Now, Spain and Italy on the south side of Europe, that's interesting, right? What's going on down there that could make that different, right? Is that a trend or is it just a one-off number? I have some theories on that, but let's keep an eye on this. I'll try to make note of that. Well, I will make note of that. We'll keep watching this. The north and the south of Europe has always been an interesting situation, right? When Greece went through its big upheaval and right around the real estate crisis, right in that window of time, you could see a big differentiation between South Europe and North Europe. Okay, that's when Germany was crushing it, okay, under Angela Merkel. Germany was really strong and they were the dominant player, and what they said pretty much would go. And that's when a lot of this mass migration was coming up from the south to the north, okay, and really, diluting the culture and the history of a lot of Europe. And it was driven by the political leaders. What does this go back to? World Economic Forum, right? This dilution of the West, I guess, to a certain extent. So kind of interesting to keep an eye on this, if this has anything to do with that, right? But again, I don't want to go into that too deep today, but something interesting to just kind of keep in mind. We had the opportunity, so let's, these are not big numbers, but interesting to watch nonetheless, okay? And then let's jump into some of these headlines. All right, so we've got the government shutdown day 3. I think we pounded that one. Rumble, Perplexity. Quick note on this one, Rumble and Perplexity did a deal, and what this does is it's a strategic deal with Perplexity, and it's to integrate Perplexity's AI tools onto the platform. I don't know what the details are on this, but since we're on Rumble and our chat's on Rumble, even though I think we're getting a fair amount of viewership on X and starting to try to get some on YouTube, but the funny thing with YouTube is I got to be careful on what music I run because I get bumped every single time I run music. So I'm going to either have to make music or I love to run music. I don't know. I'm a huge music fan. And so it's a bummer, but you have to be careful because once you go on some of these other platforms, you get music rights and you just get bumped, right? So fortunately, Rumble and X don't care. And so that will probably change at some point, but because we're streaming on YouTube, and then I don't know what Substack will do. I'm trying to get some things going on Substack too, and once we do that, I don't know what their policy is, so we'll have to wait and see. All right, but this is going to be interesting to watch what happens with Rumble. We know that Rumble made a big move about a year ago, I think it was, with Tether. Tether came in, made a big investment, or a deal. We'll just call it a deal, a big, push into Rumble with a big investment. And then this is an interesting one, right? So Rumble continues to make progress. They have to do this, otherwise they'll fall behind. So some of this is just sort of keeping up with the Joneses, but this is going to be an interesting to keep an eye on. So I just wanted to mention that, right? Not a big economic impact, but still one that's fascinating to most of us. Okay. And it actually had a positive impact on the stock. I think it'd been sitting in the high 6s to low 7s, mid 7 range, and then it popped it above 8. So it was a decent gain. So again, maybe we should, We'll take a look at that chart. If we don't look at it today, we'll look at it sometime next week. All right, this is a quick one too. The drones, the drone issue has been big in Europe over the last couple weeks, right? Trying to flare up war with, we've seen this in Denmark, we've seen this in Poland, we've seen it Romania, a couple places we've seen these drones coming across through Belarus, Russia pushing the edge, seeing what the boundaries are, seeing what the coalition's response is going to be, the European coalition's response, the NATO response, see how much pushback they get. So testing the waters, okay? And then this one, I don't know what this one is. I haven't seen the cause of it. I don't know who the blame is on this one. This one kind of reminds me of, remember that Jeff Van Drew when he swore that he had inside information that all the drones on the East Coast, okay, under the end of Biden's, window, his gig, into Trump being reelected. And there was a lot of controversy over this. And remember when Jeff Van Drew said, I have great sources, I'm on these committees and I have great sources, and this is an Iranian mothership. Okay, so, and all these drones are being released off this Iranian mothership. Again, you could tell they were fueling this fire with Iran. And sure enough, what we end up doing? We ended up going in there, flying in, our bombers in there to take out the Iranian nuclear threat. Okay, supposedly. So again, is all this drone activity in Europe leading to something? We know that these drones aren't going away. They're only going to become more and more. So we have to get used to I think we have to at least open our minds to this new form of strategic tactical warfare and gamesmanship, right? Lots of gamesmanship. How many more times are we going to hear something as foolish as this is an Iranian mothership that's bringing in all these drones off the East Coast, and how big of a threat it was? And how this Van Drew, I think he's still, I mean, how can you remain a congressman after that? How can you not just put your tail between your legs and say, I got to get out of here? I mean, that's really, anyway, I just thought this one, trying to make a little bit of light of it. Okay. All right, now let's dig into this. We've got Japan's high-stakes LDP vote. All right, let me show you this. We've got, this matters. People say, why does this matter? Well, Japan, okay, weak economy, needs leadership, needs help, needs friends. We talked about this a little bit yesterday. Talk about this pretty regularly. Talk about, Japan has been struggling since the late 80s, all right? They were dominant, right? They were buying Pebble Beach and Rockefeller Center, and it looked like they were taking over the world, and then they just fall apart. And is there something to be learned from that? Number one. Number two, where are they now? And what are they going to do to repair this and gain some strength back? Because the Bank of Japan's incredibly weak. The leadership in Japan is very weak. The last time there was strength was under Trump 1.0, Shinzo Abe. Okay, seemed like a really good guy, and we now have someone who's falling in behind Abe. It's a lady, okay, who looks like a pretty good candidate, and we're going to show these two candidates. Actually, I'll just show them right now. So here's what we've got. We've got this Sene Takichi, okay, former economic security minister, and I think she's the one that's associated with Shinzo Abe. Okay, so she would be the first female to lead this LDP party in Japan. Now, the other most likely candidate is this Koizumi. Okay, he's the agriculture minister. These are the two most likely. Obviously, we have these other Haishi, Kobayashi, and Motegi. They're also in the running, but they don't have much of a chance. It's probably going to come down to Takichi and this Koizumi. All right. Okay, so what does this mean? And what's in the mix here? All right. Why does this matter to us? All right. So Japan's ruling party vote for a new leader, right? It's the winner will become the country's second prime minister in about a year. All right, so lots and lots of turnover. The vote is today, tomorrow, and Japan, and this, that just shows you how weak the leadership has been there. Okay, so the two front runners, we talked about this, the Koizumi, she's the youngest, he would be the youngest prime minister, right? Koizumi would be the youngest prime minister since World War II and labeled as a reformist. Okay, the economic security minister, Takichi, okay, would be the first woman to run. She's the offshoot of Abe, quite conservative, and this could ruffle some feathers with South Korea and China. Again, talking about this whole Asian region, okay, the weakness of Japan, the weakness of South Korea. We saw this coup d'etat supposedly take place in South Korea. Okay, we believe that the guy that was in there was an operative for the U.S. Lots of different reasons, and was something orchestrated there. There's a lot of under the surface type stuff that goes on, and so it's not our job to analyze all that, but it is our job to have awareness about it from an economic standpoint, and to watch what goes on in terms of positioning. Okay, who's going to win this, and then what do they do? What is their relationship with South Korea? What's their relationship with, potentially North Korea, although I'm not sure you can really even establish. It's hard. President Trump's had the most progress in establishing a relationship with North Korea. Who else can do that? Okay, we know that North Korea has relationships with Russia because they're obviously in there fighting against Ukraine right now. They've got lots of troops on the ground. And then we know that North Korea is probably also funded a lot by China. And maybe that's the connection between China and Russia in a lot of ways. So what can someone like a female, okay, this Takichi, all right, what can she do, right, to be strong like Abe was And how does it ruffle feathers with South Korea and China? Okay, those are the things we're going to be watching for with this new leadership. Does she show strength? Does she get backing? Who does she get backing from? Okay, from the U.S. Does President Trump really get behind her? If he does, and he really tries to, build her up, okay, she can make a lot of progress in that region, all right, and can be used strategically in a lot of ways too. So that's going to be the thing. Watching again, it's too much to speculate on right now. We don't even know who's going to win this race. It would be interesting to see this Takichi win, right? The woman, and see if she can be strong and how and the progress that gets made. Okay, because again, Japan's incredibly weak. All right, let's see here. The thing. These are the things that are in the mix, though. Okay, we've got the U.S. relations. That's kind of what I was talking about there. We have the defense side of this. Remember, Japan was trying, Ishiba, the last PM, was trying really hard when he first came in office, okay, to establish Asian NATO, right? Again, this is that defense side of things. What's going to happen there? Then we talk about this Bank of Japan, okay? Weakness there too. Then the spending issues, all right? That's stuff we want to get into, the taxation issues, okay? And then, of course, immigration. And so these are the big things these are the key issues around this race. And I think this is a pivotal election because Japan's been a force in that area. And this goes way back, of course, World War I, World War II, the non-relationship with the U.S., and then following that, the great relationship with the U.S. that's built over time. And, from a military perspective, too, because after World War II, the world didn't want Japan to have its own military. So what did they do? They said, hey, okay, if that's the case, then the U.S. someone's going to have to defend us. And so the next thing you know, the U.S. has a lot of military bases over there, naval bases, and so forth. It's a very strategic region, and it's becoming more so with China and Taiwan and that whole North Korea. So again, a lot of things in the mix here. Japan's third largest economy? I think they vie. So it's U.S., then China, then I think Japan and Germany are tied for third. And so again, both struggling, right? Germany and Japan struggling. Can one of these two sort of take a little bit of a recovery or a leadership role going forward? And that's why this matters. Okay. All right, so let's take a look at this. Next thing on the list is the EU. Okay, so this is a quick one. The EU is planning a 50% tariff on imports of steel. All right. They set it out at 25%, but then they just jacked it up to 50%. All right. And this is so fascinating because they're following suit after President Trump. Again, he created and why does this matter again? Okay, what does this mean to us? Well, China's been dumping. Here's China's formula. Okay, take in foreign direct investment, right? Basically instigated by Brzezinski and Kissinger and Bill Barr and Old Man Bush, right? This whole group went there and established China as, this new global trade, and then shortly thereafter we see, Old Man Bush saying the New World Order, right? And then you see the actions of Kissinger and Brzezinski and this group, right? And using Hong Kong to create a connection to the West and allow cheap goods to flow back and forth, right? And so China gets in this role of taking in foreign direct investment, okay, that's directed by these big figures that we just talked about, and they start making opposite of Japan, right? Japan goes with high quality, Toyota, Sony, right? All these things that were really good. Japan takes the high road of high quality, okay, and they were pretty dominant for a while. China takes the low road, cheap goods, okay, making tons and tons of steel and dumping it on the market, destroying economies. Making tons and tons of, whatever, I always, I probably can't say it on here, but, plastic dog. Anyway, I'll leave it. A lot of plastic junk, right? Lots and lots of junk. China makes a lot of junk, and then they dump it on the system. Okay. Same thing with electric vehicles. They get in the electric vehicle space. What do? They make way too much and they dump it on the system. It's just the way that they've worked. Now, they're not getting as much foreign direct investment, so they're not able to play this game as much like they once were. And this is what Scott Bessent, our Treasury Secretary, and President Trump implies, but he hasn't said it directly, is that China needs to start developing its own internal economy instead of just making a bunch of stuff and dumping it on the system, all right? And this is that new world order, this fight that we're in, right, is to force China to come to the table and actually be a real economy that's not subsidized by all this, deep state garbage funding, okay, that allows them to play this game of making a bunch of stuff and dumping it on the system and weakening these other economies, weakening the West, okay? So, you know, this is interesting to see the EU coming back and saying, we're going to slam you with tariffs. All right. People are starting to stand up behind President Trump. President Trump forged the pathway on this, said, we're not going to take it. Okay. We're going to shut down this trade imbalance with China. And, and now we see, that if you really watch the strategic, chips on the table or the chess pieces being played economically, okay, then you can see how they're creating that dividing line. Okay, you're going this way, you're going that way. Who are you siding with? And the question is, can a war be averted? History would say no. Okay, history would say no. But it could go a lot of ways. It's just interesting to see the EU finally stepping up and following and saying, we're not going to take it anymore. Okay, we're not going to take these cheap goods. We're going to stand up for ourselves. All right, how's that going to work out for them? Maybe not good in the short run, but it's the right move one way or the other. Again, we're not in a great place, but sometimes you got to take an action, and that's what I see happening here, and that's why this one's fascinating. Okay. All right, we've got this one, the chips for the soybeans. Okay, so we know this battle with China, right? Scott Bessent, the Treasury Secretary, has been pretty quiet lately, but he was the one that was orchestrating the beginning of talks with President Xi. President Trump, President Xi, trying to get talks going. Again, we talked about this TikTok, right? And then and then the chips came about, right? The NVIDIA chips. And so we've covered that many times. No reason to go into that in great detail. But here's the next thing that's going to become a bartering in this trade deal, okay, is soybeans. All right, so let's go through a little bit of history on this. It's looking like it's about a $10 to $14 billion bailout, right, for the U.S. farmers is what this is called, okay? And we're going to connect this with the U.S. agriculture and then the trade, because I think these things go pretty closely hand in hand. Underneath Trump 1.0, $23 billion was spent on the farmers. Okay, so that kind of sets the bar for Trump 1.0. Now, President Trump said it was like $50 billion. Okay, so again, he sort of doubled it. He's pretty good at that, saying a number and then making it, maybe exaggerating it just a smidge, right? A lot of times it comes through, but sometimes it doesn't. Maybe it's hopeful thinking. Okay, so again, the deal was officially $23 billion. We know that. But again, it was stated to be $50 billion. And this is part of that on-off switch, okay, that we saw during Trump 1.0. It was like the deal's on, the deal's off, the deal's on, the deal's off. It was back and forth. I mean, the news wires, I watch it, it was just crazy, right? It was very difficult. You get positioned and then all of a sudden the deal's off. And then you'd get blown out of all your positions. And then you're like, okay, and you take a deep breath, recover, you get your positions built up again, and then the deal's off. And everything gets blown to shreds. And it was this constant battle, of trying to position, working hard, and then just getting blown out and blown out and blown out. So again, people say, oh, you love Trump or whatever. Well, I mean, look, he crushed me, right, in Trump 1.0. I mean, it was very difficult trading. I mean, it was months and months and months of this going on and on and on, right? And so, I mean, I love the things that he does. I love his guts. I love the fortitude, right? I love these things. There are things I question about his prior administration, or things I question heavily about this administration, things that concern me greatly, okay? And potentially even him, right? I can't rule that out, but nonetheless, right, he forges forward like we've been talking about. All right. Scott Bessent trying to set these deals up. That's kind of where we're at now, right? Okay, so let's go through what this bailout is for the agricultural space, all right? So again, $10 to $14 billion bailout for the farmers. It's largely to offset the losses from tariff disruptions and shrinking export markets, okay? President Trump has proposed using tariff revenues as a funding source for the assistance rather than relying solely on congressional appropriations, okay? So this is the right way to do it, I think. Some political analysts express concern that the existing USDA fund, okay, also kind of known as the Commodity Credit Corporation, may lack the capacity to cover all the proposed aid, pushing the administration to explore alternative funding mechanisms. All right. Okay, so now, and this is where it ties in, right? How much is this is going to be tariffs coming in and helping offset the losses for the farmers? How much is this going to be new trade deals with China that help give revenues to the farmers? So again, it's sort of a bridge, right? Think of it like a bridge, right? Here's where we're at. We need to bridge our way there. Ultimately, we'd love to get trade deals going. Now, there's a lot of issues here with, and I'm just going to lump these two together. Let me just bring this one up too. Argentina. Okay. Argentina, $20 billion. All right. We saw Milei and President Trump at the United Nations General Assembly meeting a little over a week ago. We talked about this swap line, right, that the U.S. was creating with Argentina. We don't have a lot of friends in South America. Okay. This has been deteriorated. How's it been deteriorated? Back to China again, right? China's been weaving its little roots in throughout South America and causing division. Okay. And they're not the only ones, right? It's not all China's fault, but it's a lot of China's fault, right? Creating these little webs. And so now we've got to reestablish South America. What was China doing? They were getting their agricultural products to feed all those people a lot out of South America. So it's an alternative for China. China can say, oh, yeah, U.S., we're going to do this deal with you, and then they can renege on it. And then what do? They just go to South America and they get their stuff. Kind of like we're seeing with Russian oil, right? India and China saying, yeah, we're not going to abide by that. We're going to keep bringing in Russian oil. Again, there's talk of this happening, shutting down the Russian oil flows, but there's really no action, right? We saw the flows. Nothing's changed, okay? So again, this is where it takes someone with bravery and to press buttons, right? Like President Trump can do. Hardly anyone can do things like he does, right? He can press buttons. That much we have to give him, okay? So what's going on in South America? Rather than let Argentina gets sucked into the World Bank and the IMF again, and always these bailouts, and who controls that stuff, right? Again, a lot of this goes back to Europe, deep state, these kind of things, right? So they dictate what goes on with the IMF and the World Bank. Scott Bessent said, again, Treasury Secretary said, look, we're not against the World Bank and the IMF, but we have to clean these things up, right? So again, I think they need to bleed those off, let them struggle, and then build them back up the right way. But you can see how difficult this stuff is. You can't even assure that the people around President Trump are good, let alone, can you imagine trying to clean out the World Bank and the IMF, how far away these are from the nucleus of the decision making? It's a very complicated process when you really think about it. So hopefully that lays the groundwork. Well, here's what I really want to say with Argentina is this $20 billion swap line, okay, with Argentina is causing problems because the farmers are saying, hey, wait a minute, you're opening up a swap line with Argentina when you're really trying to set up this deal with China. Okay, so it's going to be tough to navigate this, but this is what we have to do, right? If you're going to try to shut China down, you have to cut off their alternatives. Okay, if you try to strike a deal with them, they can balk on it because they just go to South America. Okay, if you shut down South America, but you don't set up a trade negotiation and you don't set up the forced purchases of these agricultural products, then what do? Then they don't buy them. So it's almost like a two-front effort. You have to really go after South America, and you have to be strong on your negotiations with China. The question is, what's going to be in the mix, right? What's going to be in this negotiation? What's it going to cost you? What are you going to have to give up to get this? Because there are going to be things we don't like, we don't want to see, to get the deal done, to move things forward. Sometimes that's what has to happen to advance things. And I think there are going to be some tough decisions that have to get made here. This could become bigger. My point is this could become bigger than just, like, people say, oh, who cares? Soybeans. I don't really care what goes on with soybeans. I think this could become bigger and more of a bartering chip than what people realize. Okay. Back to the U.S., right? All that being said, here we go back to the U.S. All right. So we've got crop insurance. Protecting the farmer, right? This is a way that's always protected the farmer. Now, inside the big, beautiful bill, right, the USDA's risk management agency rolled out enhancements to federal crop insurance programs. So, for instance, it's a little bit like the way the central bank worked, right? If something bad happens in one region, you just move money from one region to the other and help offset those things. That was the concept of the Federal Reserve. It's the same kind of thing with this crop insurance. If somebody has hail damage in Kansas, and all the northern region of wheat or whatever is fine, then essentially the government has this crop insurance program to say, okay, we can't afford all the farmers in Kansas to get wiped out from this disaster. So what we're going to do is we're going to help insure their crop. Okay, so again, it's trying to smooth things out. When disasters happen, they smooth things out. That's what these crop insurance programs do. Okay, so now what they're doing is the farmers. Okay. I'm going to skip that. Okay. So let's just do this. The changes, there's changes in expanding coverage options. All right. So this whole farm revenue protection, supplementary coverage, okay, is now being rolled out, and it's trying to make certain policies more accessible to the farmer. hopefully that makes sense. What can I add to that? Um, they're trying to revamp and fortify, right, this crop insurance program because this is important to the farmer. I think that does it. Okay. So again, farmers first, make agriculture great again, this policy agenda. We're probably going to hear a lot of this. So under Secretary of Agriculture, Brooke Rollins, okay, the USDA has launched a Farmers First, Make Agriculture Great Again initiative, particularly aimed at small family farms. So this is good, right? This is why feeder cattle's been going through the roof, okay, because they've been trying to shut off this livestock, again, with potentially false bioweapons, false disease, we never know. That's the problem. We can be suspicious that when they wipe out the chickens, it's not natural. This isn't organic, right? This isn't a tactic, right, to weaken us. Being attacked from the inside. Same thing with the livestock, right? The ranchers really haven't been able to make money as ranchers for a long, long time. They really struggled. Now we get, high elevated prices in feeder cattle and live cattle, right? Those are the two ones, right? You can either get baby calves and grow them, right? Feed them and grow them, or you can just have live cattle, or they break it into two categories. And ranchers do one of the other. So, not many do both. And so the key is to revitalize these ranchers, okay? Because why? Beef and protein is important for health of, again, back to the importance of this agricultural space. And so there's a chain here, right? Obviously have to grow the corn, you have to grow the soybeans, the wheat, all the things that you can use to feed the cattle. And all these are at depressed prices, yet feeder cattle and live cattle are at all-time highs. Why is that? Because they're reducing the stock, okay? So this is key, right? You got to go back to the small farmer and refortify them, okay? Instead of letting the Bill Gates come in there, all right? So this is where they're at, right? This is what I think they're trying to do. Let's hope, okay? So the policy is set to include proposals to streamline the application process, to improve access to credit and markets, and reduce the regulatory burdens, okay? This is beautiful. This is what we need. Hopefully this is really what's going to happen. So the USDA has also positioned agriculture as part of the national security agenda, okay? That's good, right? Launching a national farm security action plan to guard against foreign land ownership by adversaries and supply chain vulnerabilities. Who's that, right? China, trying to, we know that, right? They've been buying land here. And not only that, you get proxies. Like, is Bill Gates working for China, right? We know the WHO through the whole vaccine garbage, right? That whole thing. He basically owned the WHO. So a lot of this is like, do they essentially have operatives here that are essentially working on their behalf, or working either? It doesn't really matter. If they're both working against us, then again, they're kind of on the same team. We don't know who the teams are and how the money flows and how the power flows. But the point is, you need to get that junk out of there, right? You got to stop the Bill Gateses, and you got to stop the Chinas, and you got to stop these people from coming in and trying to dictate our agricultural policy, okay? Because again, this is how you weaken countries from the inside out. Okay, the other thing here is export expansion and trade wins. The administration has secured expanded access for U.S. poultry exports to Namibia, lifting restrictions on fresh, frozen, and chilled products, okay? The America First Trade Promotion Program is being funded ahead of schedule to help U.S. agriculture expand into new overseas markets. So this is even better. Yeah, China is important, but what do? You give U.S. farmers alternatives, okay, and try to open up trade. There's no reason in this world that we shouldn't be able to open up that trade, okay? We have the technology, we have the know-how, right? I mean, they did this in the 1400s. They were moving products around, on ships, okay, and they didn't always know where they were going, okay? They thought they were here, and they really ended up here, okay? But the point is, they were still trading, okay? They were finding open trade routes. So the fact that we're, 500 years later, and we're having issues opening up these, other people who need our food. Again, Bill Gates says he's trying to help out Africa. I just don't believe it. Bono of U2 says he's trying to help out Africa. I don't believe it, right? The point is, we need to understand what's going on here so that we open up the trade routes for the farmer so the farmer can be healthy, okay? And the farmer doesn't rely on a $50 billion soybean deal with China. It's great to get it, right? And it weakens China to some extent. This is why it's a bartering chip. Okay, this is a bartering chip. All right. Labor and immigration flexibility for farm workers. Okay, so this is controversial. We'll see how much light this gets. Okay, Trump has indicated a willingness to allow migrant workers to remain in the U.S. if vouched for by farmers in recognition of labor shortages in agriculture. The USDA is reportedly exploring reforms in the H-2A visa program. So again, we saw the H-1B, okay? This is the H-2A visa program to make it more accessible and reduce burdens on farmers, all right? Criticism and pushbacks on this. Some farmers and farm groups warn that these policies may repeat past mistakes. Tariffs have already raised input costs and reduced U.S. export competitiveness. Is that true or not, right? This is one of the big claims that they're going to make, okay? This is going to be the pushback on this whole thing. So here's a controversial development that the Trump administration proposed. This goes back to that Argentina. Proposed the $20 billion bailout for Argentina, and it's not really a bailout, it's a swap line. And it's trying to get Argentina off the IMF and the World Bank, which are controlled by who? Mostly by the EU, the United Nations. United Nations is China. Okay, so you can see the tearing down and trying to break and fracture this system that was being set up to work against us. All right. So again, the administration's proposed a $20 billion bailout or swap line, okay, with Argentina, which has angered American soybean producers who view it as helping a competitor at their expense. Now, why do they think it's a competitor? Because all they have available to them is China. Okay, so yeah, it's a competitor as long as the only thing you have is China. But if you open up other regions for farmers to sell. Again, competitiveness, taking technology and being more competitive. If you're more competitive, you should be able to get your product into these places, even with the cost of transport and so forth. Again, this is why it matters. This is why they started on tariffs, if you really think about it. You have to create an equal level playing field, or else the farmers can never compete. And now Argentina is a competitor to you because who's the only game in town? China. Why is that the only game in town? Because that's the way they wanted it. All right. So hopefully that makes sense. This is why agriculture, hopefully at least shines a light on why agriculture is so important. All right. And I don't know if there's anything else. Here's two more things I think I put in here, right? The debate over whether Congress will approve the funding mechanisms. Okay. That's going to become an issue. And then the USDA paused some grants and programs earlier this year, and the administration conducted a broad view of federal spending, right? Some farmers had investments in projects delayed as a result. Again, so those are side notes. Those are little side note things, again, that, this is what they argue over, right? These silly things. The real key here is understanding the global scene and understanding how to position the U.S. farmer, allowing productivity to shine, right? And giving the farmer every chance possible to either make good product, again, without chemicals, because that's another big issue, right? That's why a lot of countries don't take our stuff, because we've been over, Roundup, right? The Roundup, right? They spray all this garbage. And again, we need to clean. I don't need to go into that, but the point is we need to clean this up. Okay. Clean up our agricultural products and then compete and be allowed to compete. And then the whole ball game changes. And our U.S. farmer doesn't feel like Argentina is our enemy. Okay. Argentina needs to be our friend, and we need to support South America. Okay. Because again, that makes us strong again, right? So hopefully, but again, this is why agriculture is important. I'll say it again. And this is why it matters that we pay attention to this stuff. So hopefully that's of some value to you guys. All right. And why does it matter? Well, investment wise. Okay. If you understand this backdrop, and this goes back to what Jay Steele was saying. Okay. We're going to look at the PE ratios around the world. Not so much look at the PE ratios, but we want to look around the world. As we start looking around the world at these different ETFs, okay, exchange traded funds that mimic or represent China or represent Japan or represent South Korea or represent Indonesia, Malaysia, the Philippines, Vietnam, South America. If you understand this and you have some sort of a background on this, you don't have to understand everything, but a little bit of a background. And again, challenge what I say, right? Challenge it all, and make your own decisions. I'm just trying to present this stuff in a fashion, how I kind of look at the world and how I'm trying to look at the world going forward, and looking at these different ETFs. Because there could be a lot of opportunity in the emerging markets, right? If you get on the right emerging markets and you can understand the play that's going on, now you can look at the technicals and you can say, hey, look at this. This Argentina ETF seems to be breaking out, and you have the background. And now you can say, oh, well, that makes some sense. You never know what's happening, really, right? That's one thing with investing. You're never sure of what's happening. You're never sure of how far something can go. But if you understand a little bit of the background and how this stuff is working, and the little bit of the politics and a little bit of the agenda, then you can move into these ETFs and you can watch the technicals and you can say, look, all I know is my risk is pretty good here. I like the concept of this. I think this thing has a chance. And why do we look at these emerging markets? Because they can move. When markets start to move, these things can move 30, 40% in a year sometimes, right? The money piles in. It's kind of like we were talking about with stock market to gold yesterday, okay? Big amounts of money move into small little places and it has a big over exaggerated effect. It's the same kind of thing. Money starts to move out of these big money centers, okay, like the US or England or not England, Europe, all of your England and Europe, right? Because they're separate. China, in India, money starts to move out of these places and it needs to find another home. Where's it going to go? It's going to go where it's treated best or where it thinks it's going to be treated best. And you move lots of money in these little tiny things and it goes like crazy. So again, if you're trying to create returns, if you're trying to, create alpha as they call it, which is, beta is trying to, be on par with the market. And then alpha is outsized returns. If you're trying to do that, you look for things like these emerging markets because when they move, they can move. So if you get onto a theme and you get something right, this is how you can outperform, right? You're not, and on the downside too, right? So anyway, hopefully that makes sense as to why we look at this stuff. And, all right, so let me check in here. We've got TZ Burton, good morning. Gordon Q, Rachel Hawk agreed. Trump at Tether, December 23, 2024. Yeah, you're right. That sounds right. It was at the end of last year. I do remember, I just remember holidays. I don't know why, but that's perfect. Thanks, Trumpet. Tether is making new stable coin to be used on Rumble's wallet. Yeah. So if you've got information on that, Gordon, let me know. Again, can't cover everything, can't touch all the water out there, but that's rolling it out this quarter. Taikichi is the nationalist populist. David Rocket, there are only two fundamental economic activities on which all others are built. There are only two fundamental economic activities. Okay, agriculture, and mining and drilling. Yeah, and I think the other thing to throw in there is technology. I think technology creates it's a, if you can't eat, then, but we're moving into the space with this technology where, again, it requires energy. At this point, this is such a great representation. The other day, I was working with Aaron Day on some stuff, and he's like, our brains only take about 20 watts of energy, and it's amazing, like what our brains can do with 20 watts of energy. Now, they're very efficient at certain things, but there's other things they're not very good at, right? And so that's where it is good to have computers assisting you, like a tool, like a hammer, right? Our head's not very good at pounding nails in either, right? So what do? We get a hammer. Same kind of a thing. So in this particular case, there are things our heads aren't very good at, So again, what do? We get a computer, we get tools, right, to help us do things that we're not good at. But again, 20 watts, it's pretty impressive. It's incredibly impressive, right? It's divine, right? It's divine what our brains can do and how it's connected to our gut and our soul and our spirit and our heart, right? All these emotions and other things, it's divine, right? So the key is not to, I think that this technology, though, is becoming one of those three, right? So I think it is agriculture, minerals and mining, and also the the technology front, because this is opening up a whole new place and it's a very dangerous, but also very opportunistic place, right? If we can get a grip on it. I'm just afraid we're losing a grip on it. Okay, so let's jump in. We have a couple things we want to look at. Hopefully that was valuable, right? Not just a long, because it's amazing how long this takes. Okay, so let's jump in, take a look at a couple things here. We've got 19. All right, so let's look at this. That's the wrong one. Okay, so here's corn, right? We've been watching this corn, very depressed, okay, down at the bottom end of its trend channel. This is a monthly chart, goes all the way back to the early 1970s, back here where that purple shaded box is at. And you can see a decent trend channel, right? You can see the reactions to it. And I've laid out a potential pathway for this corn if it continues to do what it's been doing, right? And if it can rally out of here. What would make that happen? Trade negotiations, right? Productivity of the farmer, allowing them to be good at what they do and be one of the best in the world. Clean up our products, sell them across the global market, sell them in the U.S., allow the farmer to do well. And again, a lot of times what makes corn rally is not, there's a lot of factors in this. We'll get into all that. The point is, it's at the lows of the trend channel, and it has the opportunity to make some upward movement. Okay. All right. Let's look at this one. Let's go over here and look at let's look at wheat. Wheat also is pretty depressed. I don't think there's anything else I wanted to say on corn. Okay. Wheat, just the fact that it looks pretty good down in here, right? It's a low risk spot. We can manage the risk. All right. Wheat on the weekly has an energy buildup, right? You can see inside. I put the blue box on there so you can see the red going inside the white. All right. It's pretty depressed. It's below trend. This thing could push lower, right? Wheat could push lower. We know that Ukraine produces a huge amount of wheat. That would be the big competitor against U.S. wheat. All right. Now, some wheat is good, some wheat is bad. There's certain kinds of wheat that people really want, and then there's sort of junk wheat that you can use to mix in with the good wheat, right? So there's a fair, that's about what you need to know with wheat, okay, is that there's different kinds of wheat, and and the risks with the wheat is basically a weed, okay? I mean, there's only a few things that can get it, like a frost at a certain time of the year, right? Right when this thing is jointing, you can get a frost and then it can kill the wheat. Other than that, wheat is, and hail damage, right? But even with that, like wheat is pretty much a weed. It's the real differentiator is the good wheat versus the crummy wheat, okay, the filler wheat. And so that's the play on wheat. And that's why this thing spiked back in here. Again, we had a huge energy build, right? I was watching this one close, kind of like the Swiss franc, like I've been referring to lately. But there was a nice, it's hard to see it, but you can see in this area there was an energy build. And I tracked this thing like crazy, right? And I just had a feeling this thing was going to explode to the upside, just the way it traded. It took a long time for this trade to occur, but then it broke out. And it was pretty choppy. This wasn't an easy trade because it was a fair amount of chop through this area. But then you can see the Ukraine war, and it just absolutely exploded on the upside. Didn't last for long, but it went up to $13 a bushel. Then it came back down. I wouldn't be surprised to see wheat maybe even make lower lows here, okay? All right, the energy's there to do it. It doesn't look good. It could break to new lows. Something to watch, all right? Okay, so let's go look at this, the soybeans. All right, here's soybeans, similar kind of a thing on a monthly. We talked about this one, I think last week or the week before that. You can see this purple line going across the middle of the screen, right? It was a ceiling, okay? You know, soybeans tried to pop through, tried to pop through, tried to pop through, and then it made this push through. When was that? During the ethanol craze, okay? When ethanol came on the scene, and it really changed the dynamics of the agriculture market. Not that soybeans go into ethanol so much, it's that corn's the majority of that. But the key is that it takes product off the market that can be used other places. All right. We call that fungible, right? You know, like, if you have if you need to feed agriculture, if you need to, anyway, if you take away a certain amount of something, it can have impact somewhere else, right? So if you take a certain amount of corn off the market, you have to backfill that with something else, and that would be soybeans. And I think that's what occurred here, because what was the ceiling then became pretty much the floor, okay? And that's where soybeans are at now, right? They're sitting right around in this range in a pretty decent spot, right? A place where we can manage the risk. Can soybeans move higher? Well, it's going to come down to a lot of things we were just talking about. Can the channels be opened up? Can the U.S. compete? What happens to soybeans? What would be the demand and supply, right? Demand and supply is what this boils down to a lot of. Okay, so that's that. Soybeans, anything else? Yeah, let's look at this on that's the monthly. I wanted to look at this on the daily. Boy, I lose it. Okay, there we go. The daily chart. You can see it's pretty depressed, all right? I wouldn't be surprised to see it. You can see this black moving average coming down. I wouldn't be surprised to see soybeans make a run at that. Okay, we're talking about, 1100, and it's sitting now at like 1021. So what is that? About 8% move, maybe? About an 8% move. It'd be nice. We do have a harmonic structure on this. Okay, I think I put it on here. Where did I put that? There is a harmonic structure on this. Well, it's in the pink lines on there. I don't know maybe it's this one. There it is. Okay. So this is the harmonic structure. And we talked about this, got down to the downside halfway, the dark green line, kind of poked through there. I would say this is probably like the 5/8. Let me just approximately put that on there. I don't have it marked. Okay. But anyway, it came down to about the 5/8, pierced it. Now it's back up above the halfway. Could this be a potential halfway failure? Could soybeans make a move up? How will we know? Well, if it starts to march back up through these lines, right? We've got the dark green line, we've got the light blue line, the lighter green line, the lighter blue line, and then the breakout zone, the pink shaded zone. If we start to move back up into there, that gives us some confirmation. It gives us a place to manage risk against, okay? Now, halfway failures are rare. All right, they're 5 to 8% of the time, like I think we mentioned last time we talked about the soybeans. So I'm watching this to see, I don't have a problem taking little stabs down in here. I want to trade this thing, especially if it pops above this moving average right here on basically on an hourly time frame. You can see that black line coming across. If soybeans start to pop above there, I want to set things up to look for low risk buys in the soybeans. Okay, again, this is hopefully, I don't think many people will probably be trading soybean futures. We'll look for other alternatives, right? If anybody can give me some help on that, we'll look for some other soybean ETFs that we can look at, things that are correlated to soybeans. And it's quick. We can do a quick chat GPT search or whatever our, AI, genius of choices. And you can pump in there, what are a couple ETFs that are correlated to the soybean futures market or something like that, soybean market. And it'll give us spit out a couple ETFs, and we pull up the chart, look at it, find it. So again, it's just time, right? It just takes time to do it, but it would be fun to do that and start. I just need to do that, right? It's just, there's a lot of things to do, and it's just one of those things. It won't take that long. It's not that hard to do. Once we do it, it's done. We add to it. We sometimes subtract to it. If we don't like a market, okay, get rid of it or put it on the back burner. If we like it, move it in. It's not hard to do. We just have to do it. And I've got some ideas. I think I've got some help out there to help do this kind of stuff, in the near future, right? Which will be great when we can do that. Okay. So again, soybeans, manage the risk against the dark green line. If it starts to move back above the pink, we're getting confirmation. Okay. And it could be a potential halfway failure in this harmonic structure. And so again, soybeans in the mix. That's why we talked about it a lot today. All right, let's go and look at this. I want to look at feeder cattle. Let's look at this because I want to show you this, that, is it this one? Yeah. Okay. Here's a feeder cattle. You can see this thing goes all the way back into the mid 1970s. You can see it's clearly on all-time highs up here. It looks a lot like the gold market, looks a lot like the stock market. And with agriculture prices this low, why is it that high? Okay, that's the question, right? And again, I'm up for all ideas. I think I know why, because I think they're trying to take some of this off the market, right? They're trying to get rid of the rancher, right? Trying to not make the small rancher successful. And this has been a thing that's been going on for a long time, right? For a while there were a lot of videos on this, a lot of ranchers coming out and talking about it. The key is they're either all gone, they've either moved on because they couldn't make a living in ranching, or this is actually the ones that did survive are probably benefiting from this because this is great, right? They're actually finally making money for the first time in a long time. But I think the amount of ranchers out there has been dwindled down so much that this is part of it's a self-fulfilling prophecy, right? You take away ranchers, and the price goes up, right? But they're not around anymore to benefit. And so, this probably falls back in the hands of what's the company, right? And how much of this is foreign owned, right? That's the other thing we have to know is there's a lot of joint ventures and partnerships that go on in here, and someone can't maybe own more than 50%, but they own 49% and their buddy owns 5%, right? From some other. And so again, they can still have controlling interest in this, or there's a lot of complicated things that go on here, but the key is feeder cattle's on all-time highs, and it's just questionable as to why, right? It's really not that questionable, but just wanted to show it. Okay. Same thing with live cattle. Okay. Let's go to a weekly chart. I wish I had a monthly on this. I bet I do over here. Let's just take a look at this and get a big view. Okay, so here's the monthly. There you go. Same thing. Okay, back here's 1976 on all-time highs. Not even close. If we do a Fibonacci extension on this, 1618 is up here right up in here. I'll put a yellow circle on this. So again, that area it was hard to break, but it broke it. Okay, and okay level to watch. Again, it'd be nice if we had some harmonic structures on this. I probably need to dust some off and see if we've got some stuff on here. Okay, take a look at lumber because we know lumber's been in the mix here with these tariffs. This is coming. Again, soft lumber, we talked about that earlier this week. The soft lumber has been, it's in the mix again for tariffs. Who's this? Canada, mostly, some South America. We have to see how this evolves. But here's lumber. This is a way to measure it, right? This is a decent measure of the overall lumber market. Pretty flat. We saw this big move back in here, okay, in 2020 during COVID, right? That big orange vertical. That's a story unto itself. I still don't know all the reasons for that, but I question it. I need to probably go back and reinvestigate that and see, what caused all the volatility here in lumber. I know. I understand a lot of it. I don't understand it well enough. Okay, so again, with tariffs coming back in on this on the timber products, probably worth taking a look at. And we also saw kitchen cabinets in the mix too. Okay, coffee, 39. I want to look at this. Again, not a big deal for most people, but you can see, same kind of a thing. Orange was a ceiling. Okay, now it's climbed above it. Can coffee hold above this? Okay, longer term. what does this mean, right? We know where the coffee growing regions are. But just something to think about. Each one of those moves was massive. I mean, I can remember each one of these. And when coffee goes, it just goes, right? I mean, it is just straight up. And that's kind of where we're at now. Are we going to get a shift where coffee doesn't come back down below that orange and it holds up in that area? Again, not many people probably trading coffee futures, but that being said, it's still kind of good to know from an actual consumption standpoint. A lot of people drink coffee, right? So again, it does factor into things, all right? And then sugar, let's take a look at that one. I don't know if we've ever looked at that one in here. So sugar is pretty depressed. Here's a monthly chart on sugar. We've had a couple big runs back here in, we had one big run in the sugar market in 1975, 74, right? This whole thing right there, big, huge run up. Another run up here in early 1980s. Another decent amount of volatility here in the 2010s. And then just recently, right, sugar had a pretty decent run, but you can see the trend here as this is coming down. Okay. Downward sloping for the most part, lower highs. Okay. And even some lower lows, right? We can even start to potentially put some kind of a, converging triangle on here that meets, again, somewhere out in, no, I don't think anybody's really that concerned out in, 2046. All right. But that's essentially where this meets. If, again, assuming that this holds up. But here's the key is that, you could potentially watch and see what happens down in this area. Again, it's a place to manage risk on sugar. Or especially if you happen to own a business that buys sugar, this is handy, right? This handy to have a big picture perspective that you could start buying future out into, that's what these future markets are for. You can buy it out into the future. All right, let's go and look at something that people probably have a little more interest in is this S&P. We have this energy build again, the 65.74, the white dashed line. That was our upside target on this harmonic structure. Got up there on the December contract, hit it a couple times, pushed through. It's holding up above. Will it come back and test the 65.74? Boy, the more that this thing consolidates up in here, you would say not likely at this point, but never rule anything out. The key is we have momentum here. Okay. We have energy build and the odds of that thing resolving on the upside is quite high. It's probably in the 80% range and it could be somewhat explosive or sustained. All right. So, the government shutdown doesn't really matter. There's other things going on that making this market go higher, right? Reduction, lots of things, lots of variables. All right. And that's what we talk about a lot. So I won't go into that too much. Let's look at the Russell 2000. Again, S&P 500, big broad measure. Russell 2000. This isn't Russell 2000. This is, I guess it is. That was one of the stocks we looked at the other day. Let me see if I can get this back. Okay. Here's the weekly chart on the Russell 2000, just hanging out at those prior highs. We have that purple shaded zone. That would be a risk management level. And then we have the actual purple line right at the prior highs to see if it breaks through. That would also be a spot to potentially buy on a retest of that level. So if the Russell 2000 pops through, comes back and retests that purple line, that would be a decent spot to take a chance. You got two risk management levels. To bet on the fact that the small and medium-sized business can start to come alive, be revitalized, like we're talking about with this agriculture, right? We see a theme here, right? Trying to help rebuild the farmer. Let's hope. Okay, if that's the case, then hopefully also try to rebuild the small, medium-sized business, right? This common theme. If you're going to do it in farming, why wouldn't you do it with small business, okay? If you're doing it with small business, why wouldn't you do it with farming? And a lot of times these are really the same thing. They're all small businesses, okay, to a certain extent. So that's that with the Russell 2000, and I think that does it. We did have a couple of people that Filippo asked for GLTR. I didn't have a chance to look at that, but let's do it real quickly. Let's look at this GLTR. All right, what do we have here? Okay, so we have another precious metals ETF. Now, this one concerns me a little bit more than the one that we looked at yesterday with David put out there. That was that, I forget the name of that one. Is it this one, GDXY? Yeah, it says GDXY, okay. This thing has, it's just not as risky. Okay. There's an income component to it, right? It's a miners component. So it should have some follow through, even if the metals markets come back, but they're still at elevated levels. So the miners can still, as long as the miners are making spread, they pull it out of the ground, they can sell it, right? For a spread. They're going to keep going, right? They might actually do better if the metals markets come off the boil a little bit. And not only that, whatever this ETF is, and I probably need to investigate this, if they're writing options against this, they can actually earn decent income, because they're taking an underlying business, series of businesses that are miners, and then they're writing calls on top of it. So you're kind of getting a cake and an icing and maybe even a cherry on top, right? To a certain extent, because you still have the upside if the metals go higher. Okay. You get the base of miners, right? They can still benefit from the spread between pulling it out of the ground and selling it. And then you get the icing on it, which is the option strategy. Okay. So you get a lot of good things going on here. And I think I like this. It's a safer play. Again, this is riskier play. You know what I mean? You can see this thing's really extending. So to me, it just looks dangerous. And if you look at this, right, look at this thing, all the way back into here, right? I should probably go to, oh, here we go. We got the full extent of it. If I do this, right, I can strike this across here. Like, to me, this would be a high volume spot that would actually at some point probably get retested. All right. Again, the ceiling, right? Now, does it become the floor, right? Does this market come back and retest it? So this is another thing to watch for a potential level if and when the metals come off, the gold market sells off, or silver, or all of them, does pull back into this area. Okay. Can it, number one? And if it does, this would be the kind of market you want to look at to get confirmation on a potential bottom, right? A pullback. The ceiling becomes the floor, get a retest of this level, and now you can feel pretty good about coming back in the metals. The problem is everybody who's buying at the highs, they're going to get smoked out. They're going to want nothing to do with the metals market, right? They're going to get crushed. They're going to be down 20 or 30%. They're going to, again, assuming that this is going to play out like most markets do, right? We might be going into some completely different world. It could be different this time. If that's the case, then, maybe, just maybe, we're never going to come back and retest these levels. But markets being markets, I have to still bet on the fact that this thing's probably going to come back and test these levels. This would be a good one to keep on your list to say that's at a good technical level. It would give you confirmation with other metals markets, okay? And what else did we have? We had a couple other in here too. GC Genoa had GRID. Let's take a quick look at that one. So these are energy plays. Hopefully I've got these right. If not, we'll come back and do them. Okay, so this is Clean Edge Smart Grid. So again, on fire, managing the risk, pretty simple. I would say, something like this. This is pretty straightforward. I'd manage the risk against those prior highs probably. And then you can see there's a decent spot in here where there's some decent volume. Okay, so that's another drop point. And if you project this out, again, price and time, right? And this is the stuff I'll go through in some of these short videos these educational videos. So if I extend this moving average, markets love to come back and test their moving averages, right? So if I extend these fans out and give ourselves a little bit of a window, I would say, again, this isn't perfect, but it gives us some kind of an idea. If it's going to come back and test that purple shaded zone, and you extend it out into the moving averages, you would look for confluence there, right? A couple things coming together. The market likes to go back to those spots. One, to test up, check up. But two, it gives support. People look at it and they say, hey, look at this. It's a pretty safe spot, right? Take a chance on this. So, you're looking at 2028, something like this on this thing, again, for a potential add again. As it is right now, maybe just put a stop in and just sit on your hands, right? If it goes, it goes. And why does it matter? Because again, we know that all this stuff's going to come into the data centers, right? The demand for energy. We get business coming back. We get green shoots coming back. More and more energy is going to be needed. And this thing can benefit, okay? And it probably has a lot of sophistication. When it says Clean Edge Smart Grid, I need to look into this, but infrastructure and industrial FND, industrial fund, I guess. So again, probably using a lot of technology around the energy is what I'm guessing, even though I don't know anything about this one. And then what else do we have? We had MZT. Let's bring that one up. Let me see here. Maybe I screwed this one up. Doesn't exist. I think I must have that one wrong. I must have written it down wrong. We'll come back and look at that one. Here's TLN, Talon Corporation. So I know this one. I just don't know it that well. Let's look at this on it. I think we have the right one here. Talon Energy. Yeah. Okay, good. So again, another runaway freight train, right? You can see here, take a look at this, right? There was a nice energy build back in here. This is a great spot, right? You get an energy build. taking a shot down in here, we'll get into this too, right? This is a good spot to have taken a shot, and it's really easy. Anyone can do this without any technical, without any extravagant tools or anything like that. You get an energy build like that, and it's up against the red and white lines. Okay, this is just, you don't know what's going to happen right there where I put that yellow circle. It could turn around and go lower, right? You know you have energy. It wants to be released. You're at one end of the standard deviation bands, okay? So again, the market's extended down there at the bottom. And if you have any kind of again, you don't have a lot of data on this, so you really can't go to the weekly, you really can't go to the monthly, but let's just say the weekly and the monthly in this situation were pointed up, okay? So you know the trend is up, right? And so you get this energy build, right? You're up against the bottom of the standard deviation band. And if you have any other tools in there to look at, right? And I can see a couple right now. The key is it's a low risk spot to take a chance. So again, it's great looking out the rear view mirror saying, hey, that was a great trade at the yellow circle. But this is something that can be duplicated, right? You can, again, it's always scary there, but if you jump in and it starts to work, you're like, hey, great, I can start buying, right? I can start adding to this thing as it's successful. This energy is released incredibly well, right? Now it's probably getting extended, but that being said, like that was a great opportunity, and that's something you can duplicate, right? That's something you can get a platform, you can program that. There's a lot of platforms out there where you can program or have them even program something like this in for you. And I've got one, right? Genesis. I'll make, when we do this, I'll make that available, right? I can build some of these indicators, put them in Genesis. See if we can't strike a deal for, listeners where it's a little bit cheaper, because I think Genesis is probably like $80 a month to get the data. But you could put this indicator in there and you can do a scan on it, and you can actually find these kind of setups over and over and over again, right? And that's what we're going to do. We're going to set those up. We're going to make lists of these things, and then we're going to look at them technically and see if we can't find these opportunities. So I like this one from that perspective, just from a teaching perspective. That is something that can be duplicated quite regularly. Okay. Now, doesn't mean you're going to get that big of a run up, but it's a look at that yellow spot, at that yellow circle. All you know is you have a low risk chance with a lot of energy, potential energy built up. Okay. That's all you know. You don't know anything else. You don't know that it's going to release and it's going to be a huge winner like that. So you have to take a chance with not knowing what the future brings. But that is a duplicatable thing, right? That you can take those kind of chances again and again and again. No guaranteed that those are the results. But anyway, those are the kind of things we want to look at. Okay. So I think we're good. I think we covered everything. Let's see if I can get back in here. Okay. With that, I think, have a wonderful weekend. It's been fun being in here with you guys this week, and we'll do it again next week. Come back, and who knows what next week brings. But again, we'll go through it next week. Currency, debt, energy, and I'm going to try to get, and then equities on Thursday and Friday on commodities. And then what I'm going to try to do is also see if I can't get the ability to run to make some of these clips again, because there's an hour and a half or more of me speaking is a lot. It's nice to put clips in there, hear it from the horse's mouth, right? Hear it from the actual people that are making it. And some of these things, like, there's a good of not running them and there's bad of not running them. Sometimes you want to get a read for yourself, and again, I can take a 20-minute clip and snip out 1 minute and I can skew it in a direction. So that's not the goal. That's never my intention, but I realize that can happen. And so if something's really important, I'll say, hey, this is a clip. This is, kind of an indication as to what's going on in here with this person or this thing. And, I recommend you go back and watch the whole thing, right? It's worth the 10 minutes, right? Maybe not the whole 20, but it's worth going and finding that clip, taking the time and doing that. So I do hope that I can get some of those running again next week, because it's good. And hopefully a few other things. We'll see if I can get a little help on some of these things. So with that, have a blessed weekend. See you next week. And thanks for joining us. And we'll see if I can run this music and we don't get kicked off and I don't lose. We'll see if I can actually survive on YouTube here. Thanks.